8 a.m. Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Mehta. Let's welcome our experts then. Independent market expert Dharmesh, Vinit Bolinjkar of Ventura Securities and Umesh Mehta of Samco Securities joins us on the show. Today on Hot Money, we'll discuss stocks like HDFC Bank, Cummins India, sale and a stock recommendation for an investment purpose in the market which has cracked significantly. We'll start with the first stock, and that is HDFC Bank, which pretty much surprised the street. The FI limit did manage to open up in trade yesterday, but the counter, there was a buying limit of almost 4.3 crore shares that was available, but surprisingly, the stock was down almost 3.5%. Obviously, the other news was, the removal of the FI window. So the question that we're asking is, will the removal of this FI window affect any kind of demand for the stock, and what's the view on HDFC Bank going ahead? So Vinit, your view on HDFC Bank, were you rather surprised that, despite such demand being there, there were no takers at least?
Actually, we already have an ADR. So there should be no real rush to buy the stock as such. And I think the FIs are quite smart. They know that a lot of front running happens. So they will take their own sweet time to get into the stock. But gradually the stock will move up as the FI buying window gets exhausted.
Okay. So that's the view. But what's your view on HDFC Bank overall?
Overall, we are very, very optimistic because I believe that they are making huge strides into the consumption financial lending also, and they are making inroads into the corporate lending too. And given the fact that PSBs are left behind and we are almost on the threshold of a good economic boom where private investments will come through, I believe this bank is best placed to grow from here. Okay, so best place. What's your view, Dharmesh, on HDFC Bank? What did you make of the events and what's your outlook on HDFC Bank?
See, the outlook on HDFC Bank has always been bullish, and with the market getting narrower, I mean, if somebody has to borrow money, so the lenders are very few now, even in the private sector space, I mean private banking space, with Axis and ICI having its own set of trouble. So SDFC, Industry and Kotak, there are very few players who are left with money to offer to the borrowers. So their SDFC, again can garner a good market share, and we have seen the contraction in the market share of PSBs as far as lending is concerned, and all going to the private sector play, and then it's the best play in the market. So it will continue to remain, at a premium valuations. It will continue to command that. As far as the window is concerned, I don't think these are technical issues for a short term. So short term, there may be a supply of shares and the stock price may not move up the way it was moving. But yeah, it will be lapped up by the market. So FIs will be buying into it. So overall, it's a very, sweet scenario for HDFC Bank, so given the space.
Two of our guests do believe that it's an attractive bet. And Umesh, do you agree on HDFC Bank? What's your view?
So currently, out of 21 PSU banks, 11 are under PCA, and therefore the rules that RBI has imposed that unless you have a two-year profitability, you will not be out from PCA. So 2 years, these guys, so half of the entire PSU banking space, their hands are tight. So next 2 years, these are private sector banks like HDFC Bank will try and capture the incremental growth. And given that we will see a lot of capital investment from the private sector, which wasn't up till now. So all those things I think are positive for private sector banking space and HDFC Bank too. Now, given that now the window has been extended till 30th June, so they have a lot of time. So currently, the expectation that, oh my God, $1 billion will be bought on day one and so and so. So, as Vinit had said, FIIs will take their time and understand that there is no point hurrying and buying the bank. There are other good value buys also. So if the valuations are high, they won't.
Okay, I'll get back to you, Timer. So I think it's a consensus buy that's coming in from all of our guests. Umesh, I'll start with you. Are there other better opportunities in the private sector bank? What should, if someone is looking to buy HDFC Bank, should he buy that or should he buy, because valuations are already rich for HDFC Bank. Would you recommend buying HDFC Bank only, or would you recommend something else, probably from the PSU space or, the smaller private banks?
Correct. So smaller private banks, I think Yes Bank also is doing good. So valuation, obviously Yes Bank is trading at a discount, but in terms of numbers, in terms of growth, in terms of, Yes Bank is also equally good in delivering growth. So PSU Bank, I think one should take as a one cigar puff, given that the SR account will be resolved. So Allahabad Bank, we calculate, will receive around 40% of its market cap in terms of recovery. So there will be sort of bounces in PSU Bank, but sustained growth we don't think. So from long-term investment point of view, I think PSU Bank still will not qualify, because they will have 50-60% growth, and then again the stock prices will languish or will come down. So from investment point of view, private sector bank, but from trading point of view, I think PSU Bank also offers a good risk to reward ratio.
Okay, Dharmesh, what's your view on the valuation of HDFC Bank? Obviously, it's a very high FI held, and if the sentiment currently remains what it is, because the Nifty has managed to outperform this thing. So if the Nifty manages to correct, there will be selling pressure even on HDFC Bank. But what would you recommend on HDFC Bank? Are valuations expensive? Should someone wait for a lower level to buy HDFC Bank?
See, as far as valuation is concerned, for last 10 years, this has been the scenario for HDFC Bank. It has always been expensive, but it has delivered as well. So 20% kind of a CAGR growth on the AUM side has always been there. It's like a given for the market participant that HDFC will deliver this kind of a growth. Seeing the present scenario, how the contraction is happening in the banking space, this is all the more given that they will continue to grow in excess of 20-22%. If the market corrects, you may get a 5-7% kind of opportunity, but that should be the end of it. You won't be having a 15-20% kind of a stock price fall in HDFC Bank. It has never done in the last 1 year or so in any market correction. So 5-7% correction, if you are a long-term investor, I don't think it's a very prudent idea to wait for that opportunity. Maybe a staggered buying, but personally, I would recommend that HDFC Bank should be there in your portfolio. At all levels, it should be bought. It would still give you a return of at least 15% on an annualized basis.
Okay, and Vinit, what about HDFC Bank? Your view on the valuations, and will growth at a higher base continue to be there for HDFC Bank?
Yeah, so to see, always there is a concern whether HDFC Bank will manage this kind of growth on higher levels. So we did a small study, and we saw when SBI was the same size of HDFC Bank, when both of them were 1 lakh crore. Okay, it grew for 16 years consecutively. So there is ample room for this stock to move. We are about 7 lakh crores of lending for HDFC Bank. The runway is open right up till 16 lakh crores, I believe.
Okay.
They will not face competition. SBI has not faced competition. We are an underbanked country. And HDFC has always been 2 steps ahead of the market in citing new avenues of growth. They've also got heavily into business analytics. They're using it very aggressively. 30-minute loan time, which was a record, is now come down to 10%. They're mining their unsecured. They're getting heavily into unsecured lending where NIMs are higher. They're getting into the consumer finance business. They want to be larger than the largest player in the segment. So I think all these sectors which they're getting into are going to be high margin. So I believe that even if they get into corporates where the margins are lower, margins will get sustained because of this portfolio mix, and they will make rapid strides in terms of market share gains.
Okay, so I think it's a consensus thumbs up that's coming in on HDFC Bank from all of our 3 guests. The next stock we want to talk about is Cummins India. Surprisingly, the counter has corrected almost 40% from the all-time high. Obviously, the company coming out with an investor meet, and they were assuring that there won't be any further market share loss, and all the business in India will continue to happen via Cummins India and not the private subsidiary of the parent. So they tried to reassure the analyst. Are our experts convinced of the numbers and comments from Cummins? Dharmesh, you go first. Cummins, it's a quality stock, but somehow it's corrected almost 40% from the high. Is it bottomed out, or do you see more pain in this sector?
I do see more pain in this sector. See, if you look at Cummins India, for last 4 years, it has done nothing on the top and bottom line. It has just managed to be afloat or maintain the whatever revenue they were generating, around 5,000 odd crores of annualized sales, which they are doing. The type of business they are into and the type of capacity utilization which is happening in the industry as of now on the macro level, even if they maintain this kind of a share, should be an achievement for a company like Cummins India, because So there are two types of market. One is a replacement market and one is a new market. So new market you won't be having for next couple of years. It's just a replacement market and somehow some incremental orders from railways or new construction being coming out in the form of hospitals or something like that. So and valuation wise it appears very expensive to me. If you are not growing your top line and bottom line and you are commanding a TTM, I mean trailing multiple of 28, 27 is high on valuation. So the stock price correction was there, and sensing how the market is going, I do see a further side of 10-15.
Okay, so further downside in Cummins India. Umesh, do you agree, or would you be, you have another view?
I agree. Cummins principally is into engines and generators. Yeah? So engines, 2 years, and last 4 quarters we have seen a lot of growth in four-wheelers, but these guys haven't had their share in that incremental growth. Generators. So I think India is that we are slowly into that reducing power deficit, and therefore the need for that electricity, which was prior to we being self-sufficient in electricity, isn't there. So the growth parameters, the entire structural, there is a flaw in the business going ahead, because going ahead electric is the future, and therefore diesel engines will not be the one that people will want to go for. So structurally, I think, and Dharmesh has rightly pointed out, there is no growth. So if entire industry has grown, so for commercial, CV is good, delivering growth of around 30-40%, and these guys aren't. So there is structurally flaw in what they are doing.
Okay, so second of our guest again does indicate that there is weakness, and would it be a third negative view, or you have a different view?
So mine is more of a hold. I would reserve my view for another quarter to go by, because they're taking significant capex. So they are spending close to about 700 crores over the next 2 years to build capacity for exports. So their growth is going to come from the export market. The domestic market is full of very intense competition. You also have got a lot of raw material constraints due to commodity price inflation. But I believe that they can grow at about 10 to 11% on the top line and about 8 to 9% CAGR on the bottom line.
Okay.
So given that kind of growth, I don't see much downside from here. But would you buy a stock in a growing economy like India for 10% CAGR growth? I would let it be.
Okay, so that's the view that's coming in on Cummins India. Two of our guests say that it's an avoid, and a whole recommendation that is coming in from Vinit. But Vinit, you spoke about the export growth that coming in the analyst meet that they had. For the next 5 years, they are saying a growth of anywhere between 0% to 5% for the export market, which is extremely negligible for so how are they going to?
So if you see Q4, they did about 30% growth. So they were negative for the year. They did about 30% growth, and they're concentrating their entire activity in India. So exports will happen through India. Capacity is there to concentrate, and they're spending a lot on marketing also. And bulk of their clientele comes from the Middle East, and we've seen oil move up. So there is a possibility that Africa and the Gulf can be growth markets for Cummins.
Okay, any of you, is there growth that will come in the domestic market? Because export pretty much isn't doing well for the past few years. Or is the domestic only the re-rating target for market for Cummins?
So I think, so to in a sense that these guys haven't delivered when best of times, all industry players are delivering and these guys haven't. So it's hard to believe that they will really capture growth. So,
see, I would add here, see the type of business they are into heavy earth movers. So engines which they supply is not to the commercial vehicles or the passenger vehicles, it's for the heavy earth movers and big hospitals and buildings. So that's already is into a gestation period. You need the heavy earth movers to first get the 100% capacity utilization. Then you need new loaders, payloaders, and so it's into a difficult position as of now. So maintaining the same level of business is a challenge for Cummins India.
Okay, so I think that's the view that's coming in on Cummins India. No doubt it's corrected 40%. Vinit is saying it's a hold, not a buy or a sell at this point of time. But the other two guests do believe that there could be more potential downside that could come in on Cummins India. The next stock we want to talk about is SAIL, one of the best movers in trade yesterday. Let's see what it's doing. It's up again today. Fourth quarter numbers were strong. The management commentary was also stronger. But will the rally in the metal space, especially steel, continue? That's what we are asking. Dharmesh, what's your view on SAIL?
I think there's another 15-20% kind of upside there in the stock price. Fourth quarter was exceptionally good for SAIL, and if they are going to repeat this performance, I mean they take it from here. So what was the happening was the capacity utilization was very low for SAIL. So this time the numbers are good, and that has been on the macro level for the entire industry. The debt level has gone up, but I think with the cash flow coming in, they would do something to reduce the debt level. And going by the numbers which they have given, so 8 rupees kind of an EPS can be for FY18 and 10 rupees can be for FY20 on 20% growth. So then it becomes very cheap. Even if you give it a multiple of 10, 12, so 110, 120 is the likely target price. So I do think most of has been discounted in the price, but sensing how the infra spending by the government and everything is there and how the activity is picking up on the ground. So there's 25-30% more to be made on SAIL.
Okay, 25 to 30% more. What's your view, Umesh, on SAIL?
I agree with Dharmesh. So SAIL, I think, so government entities are the last one to adopt the changes or what's happening in the industry. So SAIL indeed should turn around, and this turnaround likely is on a stronger footing. Since last 10 quarters, they have been consistently reducing the employee cost. So around 10% every year to year, since last 3 years, they have been able to reduce the employee cost. So I think that's one very positive. Second, their expansion in Bhilai plant is almost over, and this year, 2 quarters down the line, they believe that. So I think the company should deliver a production of around 18 million tons from the current 14 million tons, and next year around 20 million tons. So this increase in production, reduction in employee cost, and a good environment in terms of domestically, government is trying to protect steel industry, and therefore the price, this SAIL should deliver better numbers than that we have seen in the past.
Okay.
So turnarounds I think seems sustainable.
Okay, and what's your view, Vinit, on SAIL?
Extremely positive.
Okay.
I think if there is one stock that I would buy in the steel pack, it would be SAIL.
Okay.
And so you have capacity from 14 going to 21 crude steel capacity, and they had a mix of almost 30% intermediates. So they were not getting the bang for the buck. Tata Steel and JSW are 100% into finished products. So this, with the capacities coming in, the bottlenecks are removed, and you will go to maximizing your production of end product steel. So this is going to lead to margin expansion. So we've seen EBITDA move from 4,000 to 6,000. They've guided for 8,000 for this year, which is very positive. And if you see right now, their average selling price per ton is equal to what JSW Steel does. Okay, they're 20% lower than Tata Steel. But I think that catch up is going to happen. And although they are not the best in terms of EBITDA per ton, but below EBITDA per ton, the finance costs, they are much cheaper than
okay, I think it's a consensus, positive view that's coming in on SAIL by all of our guests. Umesh, 4 large steel companies, Tata Steel, JSW Steel, SAIL and JSPL. What would be your pecking order?
So currently, given the valuation, given the setup, all 4 companies are, I think SAIL would be better, because given that we may have a correction in steel prices, but because SAIL, the increased capacity will be on stream, so I think SAIL to that extent will not be affected by reduction in the top line. Okay, so SAIL is the top pick among all 4. What would you pick among all the 4 steel companies?
I would still go with JSW Steel at the top of the order, followed by SAIL, because SAIL enjoys government orders kind of info, so that kind of an advantage it does have. But as far as steel capacities are concerned, many capacities which are not functional will be also added, like Bhushan Steel, and with the acquisition of Tata Steel, that entire 6-7 million tons will come into the play. So capacities will again, you will find a steel market where capacities are again back into the play, and then the capacity utilization will again be a concern. So it has its own set of problems, and the way the macro environment globally is panning out. But still, I do feel that 10-20% kind of an up move is there.
Okay, and what's your topic in the?
So SAIL followed by JSPL, JSW and Tata Steel.
Okay.
And I believe that although the capacity is coming in, internationally capacities are going down. So China is closing in more capacity. Markets are getting increasingly isolated. And I believe that India will have room to also export even if these new capacities come up. So I believe that SAIL would be operating at 85+% capacity utilization. So that stays my top pick.
Okay, so SAIL, I think metal and steel as a pack is something that our guests are extremely optimistic about, and SAIL and JSW Steel pretty much feature among the top list among what our guest did indicate. And now we are asking our guest for one investment idea. The markets have corrected significantly. Which are the stocks that you should buy and hold for an investment perspective, not mainly on a trading perspective? That's what we are asking out for. So Umesh, I'll start with you. You like Tata Motors, and
Yes.
what's the rationale?
So number one, the stock price is corrected by half from 600 to below 300. But apart from that, the company since last 2 quarters is really showing sales growth. So we have seen sales growth of around 15-16%, which was absent since last around a year. Second, company has realized that the low-hanging fruits are over, and therefore now company has started to give dealer commissions, and that's why there is a impact on operating margin level by around 90 basis points. So now when the penetration happens through dealer level across the world, their I-Pace, the new model that they are launching into the electric vehicle, the Land Rover, the Jaguar. So I think all these things will turn around and slowly will be shown on the numbers. Currently, because of profitability, of impairment on one-time losses, profits have not been in. So currently, profits are not available. Therefore, market is really ignoring those numbers. But top line is growing, and sooner or later, the market will reprice it. They are going to shift their plant to Slovakia, and that is a very low-cost plant internationally. And from there, they are going to deliver their entire product line. So I think and that fund will come from 2 quarters down the line. So the margin expansion, the growth, the cost reduction, all these things will happen once that plant is online. And domestically, Tata front is really firing all cylinders. You see each and every category, the numbers are better. So domestic acceptability is there. The CV is firing. The compact car segment is firing and better than in terms of growth. Obviously, the base is low. Therefore, we may think that the growth is higher. But valuations are comparable. They are around 10, 11. Internationally, also companies are available at around 8, 7, 8, 9. So this is the range. So I think valuations are reasonable. There is enough margin of safety, and we should give time. I think Tata Motors will deliver.
Okay, so Tata Motors is the stock that Umesh likes. You like Bharat Electronics,
right? So as far as Bharat Electronics is concerned, last quarter number was bad. So, but I think that's more to do with accounting of the numbers rather than the business doing bad as well. So 10,000 crores of an top line they are delivering, and 40,000 crores of order book is there. So clear visibility of 25% kind of a CAGR for next 2-3 years without any incremental orders getting to play. Last year itself they got an order book of 10,000 odd crores. So the rate of order book is also pretty much there as far as Bharat Electronics is concerned. 90% of the business which they do is indigenous research. Okay. And into radar system, missile technology system, high-end this kind of a play it is into. And with defense sector opening up, any tie-up if any foreign company does, it has to be routed through Bharat Electronics. So that's the mode they again enjoy, even if the sector opens up. 20% kind of an ROE is there. I do think for next couple of years, 20-25% kind of a CAGR they will deliver on the earnings front. So with the recent price correction coming into play, even if you give it a multiple of 20 rupees, so 140, 150 should be the target price. So enough room is there. 110, 112 is a very attractive price to enter into Bharat Electronics, a debt-free company. So margin of safety is there. I don't see a slide of more than 10 or 15 rupees from here. Upside, you may get 30-40%.
Okay, 30-40% upside in Bharat Electronics. An interesting company, JK Agritech, is something that you like. What's the story here?
So it's a seed company and very tiny equity, owned 75% ownership by the Singhania Group. And while India, everyone has been looking at India as a growth market, these guys have 5 years ago gone and expanded and got their seed portfolio ratified and ready to market in the African continent. And the African continent is going upsurge on the production of agriculture. So Ethiopia is spreading its wings to manufacturing. They have FTAs with US and Europe. So they need cotton, and you need cotton seeds. Also, China's cotton crop has got spoiled and they are going to restock their buffer. So we are going to see cotton in demand, and that will lead to cotton exports from India also picking up because we may have surplus cotton. And this is and cotton is the large chunk of the portfolio of cotton seeds. And the quarter 4 and Q1 are the best quarters for the company. So I believe that a new market has opened for this company, and the cyclicality in earnings which is there, where you got 2 quarters of loss, Q2 and Q3, that can go away and add to the profitability.
Okay, what are the financials? Is it a profit-making company?
Yeah, it is always a profit-making company. They make about 14-15 crores of profit. The profit growth has not been that much as I had anticipated, but I think the opportunity is coming in later than I thought. And I think from this year onwards, we'll see the growth kick off in this company.
Okay, on Tata Motors, Umesh, how come it commands such a low valuation? So quarter on quarter, Tata Motors promises to deliver, but they have somehow not been able to deliver. So, but do you think that this valuation of 8, 9, 10 times is justified for Tata Motors? And why is and somehow JLR has not been delivering? By when do you see that JLR will start firing for them?
Correct. So valuation point of view, I think earlier it was available at around 16. So now they have really corrected. So this is what the lower end of valuation that we expect, that from here on there is no. So there isn't any space further to go down further. So growth is happening. So they have started using now dealership network across the world, and that's why there is an impact on margin. But and that has delivered. So the strategy to enter the market, penetrate the market through dealers, that is now delivering numbers. And you've seen last 2 quarters, there is an uptick in demand for their international models. So that is where we think that now I think things, because domestically it's only 20-22% of domestic operations. So at an aggregate level, domestic is not going to make a big impact. But when they really grow their international brands, their Land Rover, their Jaguar, their I-Pace, their electric vehicle, and they are the ones who are ready with their electric vehicle. So technologically they are advanced. I think they have superb management team, and they have understood that now this is the way to capture the next level of growth, and they should deliver. Okay, and we're running out of time. Very quickly, what are the key risks involved in BEL? If someone wants to enter the stock, what are the key risks that he should look at? I don't see any significant. And what's the big trigger point for them? Trigger point is the existing order book, execution of that on a timely basis. So you will have the numbers flowing in, and then the stock looks very cheap to you. So to me, this correction which has happened is a big opportunity to lap the stock. Okay, so that's the view that's coming in on what our guests have indicated. Vinit is speaking about a stock called JK Agritech, but remember it's a low volume stock, so you'll have to watch out for that counter for a while. Bharat Electronics is something that Dharmesh has spoken about, and Tata Motors is the pick because of the valuation and the growth triggers that Umesh has spoken about. But with that, we're timed out on the show. It's a wrap on today's Hot Money. Vinit, Dharmesh and Umesh, thank you so much for joining me on the show. Ask BQ comes up next. Stay tuned to Bloomberg.